Hello guys, welcome to a Trading Parrot. We are currently seeing a little bit of price suppression so far going on at 104k. I'm gonna give you a very quick market update, just looking at how the order book is looking, the 4-hour daily, and give you an overall picture. Let's get started with the 4-hour time frame. As you can see, we are still in this descending channel after the breakdown on the 9th of May. Price managed to go as high as 106, and since then it's joining the momentum following the trend to the downside. And as you can see, today we managed to hold the line and not break down from the double top that I was mentioning in the morning. So that neckline is still unbroken. We have managed as well to go high to the fair value gaps that I mentioned. Number 1 and 2 are fully gone, and we currently forming a wick to the upside into the top of the resistance in here at RSI 57. You can see that the orange line there, I left it at 104.4 this morning. That's the level I gave you in the video, and we went as high as 104.200. And currently in the order book, you can see that they step right there at that resistance, and they place 3, not just one line of defense, followed by all the defense over 100k, 105k, all the way to 105.2. as you can see there. There's of course more resistance, but that's coming in at 110, way higher if you can see. So is the double top completely broken at the moment? I will say not necessarily, because we are still so far seeing that this candle that went too high is getting sold off with a red candle. Of course, there's still 48 minutes to confirm that. Remember, I told you there's a potential for a short from the areas of the fair value gaps, not from the breakdown, because when you trade the intra candle in here, they squeeze you up, and that's precisely what they did today. I hope you watched the video in the morning and that you are not in a short from the neckline. That is a terrible position to be in. And the target of the breakdown, let's remember that from the neckline into here is giving around 97.4, but the golden ratio is 96.3 and the extension of 1 is 99.5. So within that range is where we could go if we confirm this red candle closing like that, increases the chances that we go to the neckline and we produce the breakdown. But not everything is bearish. There is an alternative. There is a scenario that I usually use to challenge the bear case, and I put it on the table and I look at both without any trouble, because I need to basically make a decision. Am I gonna go for one or the other? And this is the bullish case. Let me remove the previous pattern of the ascending broadening wedge in here, and you can see that this is a falling wedge and is compressing. That is a bullish pattern. So we got the resistance right there at 103.4. So far we are closing below. If we come back down now, we should go to 101 and then continue within the pattern. The longer we stay there, there is an option that then we break out to the upside and we come back to 106. 106 is the level where we have all this liquidity there, and that rhymes with this idea of a falling wedge, because the falling wedge has a target of the high of the wedge, so it can go all the way to pretty much where the liquidity is. How do we confirm the breakout? So I do not enter in the breakout. If I want to build a long, I build a long at the lows, right? I build that low there, I manage my risk, because remember, there's tons of fair value gaps in here that also attract the price, so you need to be prepared for those to fail. If you are a trader and you want to call yourself a trader, you need to manage risk, right? So if we break to the upside and we confirm the breakout, what I would like to see is the RSI breaking beyond this white line, and potentially we are going to break first with the price, and that is not a great setup, because you can see that the price is right here already at the resistance, but the RSI is pretty far from the resistance. So it might not be necessarily the best setup from the technical point of view of combining momentum with price action. But you know, since in 2024 we had a very similar setup, I am still looking for that potential of breaking beyond 106, while at the same time I monitor the possibility of the double top playing out. It's not, neither of those scenarios are fully discarded. We cannot say no, impossible that one of them is not going to play out. That's why we keep an eye on either of them and we do the one that looks stronger, right? In here we can see that the daily is still below below the second layer of support that we lost. So that's why in this summary, I'm giving you daily potentially breaking the second line of defense. That could make stronger potentially the bearish case if tonight we close like that. In that case, we get 4-hour and daily joining forces for a potential lower target. If now we reclaim on the 4-hour and we break out from 104.5, that could change things, right? Because we could get a 4-hour breakout, we could reclaim the support on the daily. I can already picture myself, changing the top 2 blocks in here to say, well, those conditions were met. We need to now be looking at what happens to the upside. On the weekly, we are still below that resistance. We haven't taken any decent pullback so far this week. And on the on the daily, I want to see how the MACD is doing. It's open in the mouth in the morning. It was as close as this area in here, so that is a good sign, but still not fully confirmed. And let me leave the daily completely open in here, and let's go into the order book. Let's see if I'm not missing anything. I don't think I am. Here it is, the liquidation level. So we continue to look at that 106. We are always become suspicious whenever the price comes closer to here. Are we gonna go for that? Are we gonna go for that? Where is the technical setup that can get us into 106? Well, I already flagged it in the previous chart, and I told you how we can get from the bottom of this descending wedge into 106. So that is doable. What's calling my attention on the lower end is this 100k that now is starting to become little by little more heavy. You can see how all this sideways action now is starting to attract longs that are becoming bored of the price action. If they do a great job and this area of 100k becomes heavy enough with a 4-hour and with the daily both joining a bearish trend, we could hit that even if the 106 is heavier. Keep that in mind. Still, weekly and monthly, the trend is strong. So if you are not well experienced in taking shorts, just stay away from any short. If you have never managed a short in a condition like this, just don't do it. And let's go very quickly into the order book and let's see what's going on with the longs. Well, the longs got really interested at the double bottom in here on the 15-minute, and then they pull out. They came back to 43. Not a big pull, rag pull, but a decent one. And we are seeing how at the highs now of around 103, we still have 006, a little bit more lean towards the ask, I will say, with 006 negative. So that means that we have more limit orders at the top of the price, and something that is an alpha that could help the longs get out of this situation is this 260k on the delta, and that is a good reason to continue maybe moving higher. But let me refresh this, because with this pull up, I would have expected that the shorts have been destroyed already, but it seems that it went just from 300k to 272. So maybe the tool hasn't updated, because this move went from 101.7 all the way to 104 pretty much. So it should have decreased a lot more. I'm gonna check it later. On the FAR charts, I wanted to see the placement of the orders, because on market monkey terminal we can see that the vast majority are wanting to short. We have a sell wall that you cannot see in the exchange, but it is there. By the way, marketmonkeyterminal.com is for free. You can just access these charts live without paying anything so far. You get 500 of support at 100k, and that started now, right? With this red candle coming down, we are seeing that either they want to manipulate you with that, and as I'm recording, I'm seeing also some new orders of support at 101, but it's constantly flipping. They put it, they remove it, they put it, they remove it, and that's the beauty of this tool, that you can see everything live. Unfortunately, trading live still down. Fair value gaps, we talk about the fair value gaps in here. Okay, all gone, just like we said. Still, you can go to those fair value gaps, just touch them, and still don't spoil the double top. The double top is here, still here, it's still valid. It hasn't broken down. It only puts weeks to the downside, and we can invalidate it, sure, but we are prepared for both situations. We are great traders here, right? Let me see if I'm missing anything else. Oh yeah, I wanted to see general markets. Remember that general markets, Nasdaq and S&P breaking the resistance of 58 on the weekly, or going beyond the numbers I gave you, which are Nasdaq 21,691 and S&P is 597. If we go beyond that, we get a global breakout on both of them. We are already seeing price action very similar to the recovery of COVID in here, right? So we get a correction. Of course, COVID was deeper, but so far we're getting there, right before putting a high, a new high. And that is more or less what we are seeing in here. And Trump is saying buy, and that's getting a lot of people really, really bullish. Let's look at gold. Well, gold still with a top at 35 and testing our support at 31. DXY is attempting to continue with the breakout. Remember, RSI broke out, price got rejected, but I told you, I have the feeling that it's gonna carry on in this direction just because of the momentum. Guys, thanks so much. I hope you appreciate the update. If you do, hit the like, write down a comment down below, subscribe the channel, do all of those things, and I'll see you tomorrow. Take care. Bye-bye.